Hello and welcome to another accounting video. In this video, we're going to be talking about amortization of intangible assets. As you may recall, intangible assets are amortized only if they have definite life and that they were not internally created. These intangibles must have been purchased. So let's take a look at an example in which we have a company that has four different situations and they've asked us to calculate the amortization in each of these situations. So for this company, the first case they're telling us is that they purchased a patent for $1 million on Jan 1st, 2018. The patent is being amortized over its remaining legal life of 10 years. It's due to expire on January 1st, 2028. They tell us 2 years later, during 2020, we decided that the economic benefits of the patent would not last longer than 6 years from the date of acquisition. That is, 2 years have gone by already. Okay. What amount should be reported in the balance sheet for the patent, net of accumulated amortization at December 31st, 2020? So let's start out with answering a few basic questions. What type of intangible do we have over here? The intangible is a patent. Second is, what's the date of purchase? Remember, it has to be purchased for us to amortize it. So the date of purchase is Jan 1st, 2018. The next question is, what's the cost of the asset? What did we buy it at? That's $1 million. The next question is, what's the legal life of the asset? That's the remaining legal life is what we're concerned. It's 10. So using the straight line method, which is what we would use for most intangible assets, our amortization cost per year is going to be $1 million divided by 10 years. It's going to be $100,000 each year. Now, we've made a change in estimate. The estimated life of the asset, we are saying it should not have been 10 years. We are revising that estimate. Okay, they're saying it should be 6 years from the date of acquisition. So what we're looking at is a change in estimate. And what have we done? The date of change is the first thing we need to know because I need to know when this is going to become effective. And that's 1/1/2020. Second is, what have we changed? The estimated remaining life of the asset, we say now is 4 years. So if the total life should have been 6 years, not 10, 2 years are already gone by, so we have 4 years remaining. That's what we're concerned with. What was the patent in the books? Remember, you always have intangibles at net, unlike your property, plant, and equipment, which you would have the original cost, less accumulated depreciation, and then you say building net, and you give the amount. For all intangible assets, you just report the net amount. So the net amount at this point of time is $800,000. That is at the date of change. So $100,000 is the amortization. We've done it for 2 years. So the past, it is what it is. We're not going to make a change. We take this number now, you divide it by the remaining life, and you say that your amortization moving forward is going to be $200,000. So the first 2 years, we amortized 100,000 each, that's 200,000. In the third year, we've amortized 200,000, so a total of 400,000. The question being asked is, at December 31st, 2020, what is the balance sheet amount you're going to report? So I have my partial balance sheet, my patent, the net amount is going to be 600,000. Once again, it's $1 million, less the amortization of 100,000 2 times, less another 200,000 in the third year, leaves me with an answer of $600,000 is what I have in my books. Now the next one, they're telling us that we purchased a franchise from Alexander Company on January 1st, 2019 for $400,000. The carrying amount of the franchise on Alexander's books on this date is $400,000. That information is really not relevant. What is relevant is how much did I pay for that asset. I paid $400,000. The franchise agreement has an estimated life of 30 years. Because we must enter into a competitive bidding at the end of 2021, it is unlikely the franchise will be retained beyond 2028. What amount should you amortize for the year ended December 31st, 2020? So in this case, what we're looking at is, let's start out with some basic information. What's the intangible we have acquired over here? It's a franchise. What's the date of purchase? The date of the contract. It's 1/1/2019. How much did we pay for this? The original cost is 400,000. Okay, so in this case, the key over here is the remaining life. What's the amount, the life that we have over the period over which we can amortize this franchise cost? Okay, in this case, it's going to be 10 years, not the 30 years. So how do I come up with 10? January 1st, 2019, all the way through 2028 is what we're looking at. Okay, so a period of 10 years, because we say it is unlikely the franchise will be retained beyond 2028. So December 31st, 2028 is it for us. So that's a 10-year period. So what should the amortization be? Simple answer, 400,000 divided by 10, and the answer is 40,000. Calculation is easy as long as we know what numbers we're working with. So for the second case, the key was identifying the period over which I can amortize this asset. Okay, now let's look at the third one. On January 1st, 2020, we incurred organizational cost of $275,000. What amount of this organization expense should be reported in 2020? Okay, so question is, do we have an intangible? Okay, do we have an intangible? The answer is no, no intangible over here. So what should I do? This entire amount needs to be expensed. So the expense is going to be the entire amount of $275,000. The full amount is going to be expensed, $275,000. Let's look at the fourth case. We purchase a license for distribution of a popular consumer product on Jan 1st, 2020 for $150,000. It's expected this product will generate cash flows for an indefinite period of time. The license has an initial term of 5 years, but by paying a nominal fee, we can renew the license indefinitely for successive 5-year terms. What amount should I amortize for the year ended December 31st, 2020? So let's identify a few things. What intangible do I have over here? Name of the intangible is a license. Okay, what's the date of purchase? What date did I acquire this license? Jan 1st, 2020. The original cost, the amount is $150,000. Okay, now this is important, the life. What is the life, estimated life of this asset? Well, we say we signed the contract for 5 years. However, this contract is renewable indefinitely. Okay, so what's the amortization? Okay, it's 0. Why? Think about it. Original cost divided by life. If life is indefinite, 150,000 divided by indefinite, that's a meaningless answer, so we do not amortize the asset. It just stays in our books at $150,000. What happens to all your intangible assets? We are required to check them for impairment on an annual basis, whether they're internally created or these assets are acquired, especially when they're acquired an asset like goodwill and all these other assets. We are required to annually check, is it still useful or not? There are some assets, such as your property, plant, and equipment. If you have a car, you know the car is useful. You know you can drive it. You know if it's still in good condition and you don't need it, you can sell it. Okay? For the intangible assets, it's really a legal right that you have purchased. And its utility really comes from, can I make money off this or not? The current circumstances, if you look at our economy, there are so many companies that will have to revisit their intangibles, take a really close look at it, and decide whether these intangibles are impaired or not. But for now, in this particular exercise, our focus is on intangibles, the amortization. So we need to recognize a couple things. First is the internally generated intangibles are going to be expensed. You're not going to keep them in your books. They have to be purchased. So you need the purchase price. You need the date of purchase. You need the life of the asset, the estimated remaining legal life or useful life. You're looking at the shorter number. Okay, you can't go with a bigger number. If the legal life is shorter than the useful life, you still go with the legal life. Whatever is the remaining, the shorter of those two, you take that, and over that period, you're going to do an amortization. Unless mentioned otherwise, amortization, we always use the straight line method. In a few cases, you may use the usage method. That's the activity-based method. But in almost all cases, we're just looking at the straight line method. So our next exercise, we're going to focus on goodwill.